With all the volatility in the market, earnings season basically over, now it's time to actually look at potential new positions. Well, at least that's what I'm doing, and that's why Nebius is back on the almost buy list. If you've watched my latest portfolio update video, you know that I basically ran out of cash because I've been adding to the existing positions, and so I'll have to wait a week or two to add more cash to the portfolio. And so, yes, although today's price looks very good for Nebius in my eyes, $27.69, basically back to prices not seen since the DeepSeek drama crash. Right now we're at a market cap of $6.78 billion, so in my eyes, very attractive because I do believe that this company has a bright future. I've said it from the past, not saying this just now because I'm making a video about me potentially opening a position in that company. No, I've been saying this before. When it was at $25, $26, $30, $40, I think the future is bright for that company. Yes, that company previously, Yandex, yes, there were some ties with Russia, and that's why they were delisted, and they were listed back on the Nasdaq in October of 2024. Now, if you want to learn a bit more about the core business and all of that, I did specific videos about Nebius in the past. This is just me, my reasoning behind me potentially opening up a position in Nebius in the next coming weeks or next coming days, depending on whether or not I want to take profits from some other positions or sell another position, which right now I don't think that's going to happen. So let's talk about Nebius. If you enjoy this type of videos, hit all the buttons. Would really appreciate that. We're trying to make our way to 90,000 subscribers, so hit that subscribe button. It's free. You can always unsubscribe later. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Nebius, unlike many other small AI startups or smaller AI companies, is actually, well, first up, it's a publicly traded company. It has a lot of cash, just over $2.4 billion in cash and zero debt. Now, in a more recent interview, the CEO did say that they will probably raise in the future because they want to grow faster. So to be honest, I'm not that surprised. I even think that I said it in previous live streams or previous videos. Now, they are building a lot more data centers specifically in the United States because, well, guess why? Because their customers or the biggest customers are US based. And he basically said that even the European customers, because they're also based in Europe, even the European customers have been asking them to build more in the United States. Now, what's their main advantage? The CEO said they have a great team with a lot of experience from the Yandex days. They build data center more efficiently than the others, faster than the others. They can build racks more efficiently than the others, and they could also build the software stack. So basically, they're a full stack AI cloud platform. Now, for those that did miss the earnings recap, this was basically what happened. So Nebius, the core AI business revenue grew 602% year over year, driving the group's $37.9 million. That was up 466% year over year. So yes, revenue-wise for a quarter, still quite small, but you'll see how big that can become. New US and Paris GPU clusters, AI cloud platform launched, and they raised $700 million. So they had $2.45 billion in cash last quarter. Then when you buy Nebius, you get, of course, a couple of other things. Now, the main reason why you're buying it at the moment is because of the core business. It's Nebius, the cloud side. You also got Toloka. So Toloka is more about data labeling, previously manually. Now, of course, a lot of automation there, but they say that they did pivot to Gen AI data and added top model producers in Q4. So think about the Amazons, the Microsoft, OpenAI, Google, etc., etc. Full year revenue for that increased 140% year over year. Then the second largest segment of the group here is AV Ride, the autonomous vehicles, autonomous robots. We've talked about AV Ride a little bit when talking about Uber because they have a partnership with them. Last quarter, they also announced the Grubhub robot rollout at Ohio State University. Uber Eats pilots in Texas, Japan certification was also gained. And then Triple 10 was basically an education platform, or is an education platform. Q4 enrollments were up 100% year over year. There are 4,000 new students, and they've found new financing with Ascent. This is basically reskilling workers in traditional industries that basically want to learn a bit more about, well, the new world and probably make more than they did before. I'll talk a little bit about that in a second. They also said that ARR is going to hit $220 million by March 2025. They're still eyeing $750 million to $1 billion in ARR for the full year 2025, and they said that's well within reach. Now, more recently, there were two announcements with regards to AV-Ride, the autonomous vehicle platform. So one, AV-Ride and Hyundai Motor Company announced strategic alliance to accelerate autonomous mobility. That was on March 5th. And then back in February, they also announced that they are partnering up with Rakuten to launch autonomous delivery in Tokyo by using these delivery bots. Now, going back to the Triple 10 comment, so Triple 10 was actually nominated as the best IT bootcamp by Fortune magazine. So I guess it's worth it. Now, touching back on a couple of things from last quarter, we can see, of course, revenue increased quite a lot. We can also see that total operating costs and expenses increased basically close to 90% year on year. A lot of that increase has to do with a huge increase here in sales and G&A. Now, they shared a couple of comments during last earnings call. So they were pleased with everything that they were able to accomplish in Q4. Their sales function is now up and running, and they are seeing the results, which is basically why we've seen such a huge increase year on year. More clients are coming onto the platform, and our more diversified customer base is already contributing to strong gross run rate revenue. Based on contracts already in place, March ARR revenue will be at least $220 million, and we have more potential contracts in the pipeline. Given this momentum, as well as the anticipated impact of additional data center capacity that we are building, as well as the next generation Blackwell GPU coming online later this year, GB200, and also they talked a little bit about GB300, our projected December 2025 annualized run rate revenue of $750 million to $1 billion is well within reach. They also announced that they're deploying the new H200 clusters in Iceland, which they expect to be available for customers in March, which is basically now. And with the addition of Iceland and Kansas City, it takes their total current capacity to around 30,000 GPUs, most of which are H200s. They also told us that all of these facilities are potentially scalable to a total of more than 300 megawatts as and when they are ready to do so. Then asked about how confident they are of reaching their goals in 2025, they say they're very, very confident in that. We are significantly scaling up our data center capacity this year, and we will have more than enough to support this ARR number. Second, we also have not yet deployed all of our even H200 GPUs and have Blackwell reserved and coming online later this year. This may be the main source of our income. Finally, as they enter 2025 with great momentum, even with the existing capacity and based on contracts already in place, their March ARR, as they said before, is at least $220 million, and they have more potential deals to come soon. So they feel very good that they're well on track to hit that ARR guidance for the end of 2025. And actually, in reality, they believe that the scale opportunity could be much, much bigger. And now, more recently, they said that they accelerated the US expansion, adding up to 300 megawatt capacity at the new data center in New Jersey. And here are a couple of comments from the CEO. Their first major data center in the United States clearly advances their strategic goal of expanding their footprint in the American market as they continue building Nebius into a leading global AI infrastructure provider. This site has the potential to host dedicated large-scale instances, and they have considerable flexibility to accelerate our deployment plans as and when we need to. With New Jersey, we now have secured expansion capacity to over 400 megawatt, and we are actively reviewing options to extend this pipeline further as we seek to grow aggressively to multiples of where we are today. In addition to the new data center in New Jersey, Nebius today announced incremental capacity additions at its existing co-location deployment in Kansas City and a new location in Iceland. In Kansas City, Nebius has agreed a second deployment phase with the additional capacity expected to be online by the end of Q2 2025, so another 3 months or so from now. Delivery of the first phase at Kansas City remains on track for Q1 2025, which is basically going to happen any day now. In Iceland, Nebius confirmed a new co-location as it builds out more AI infrastructure in Europe. Physical deployment and software installations are underway, and the new capacity is expected to be fully operational and available to clients by the end of Q1 2025. This deployment is powered by Iceland's abundant geothermal energy to reduce environmental impact. Combined with the tripling of capacity at Nebius' first data center in Finland, as well as potential deployments at new sites currently in the pipeline, these additions will make a significant contribution to the company's planned ramp-up of installed capacity in the US and Europe during 2025. And so if you ask me that ARR $750 to $1 billion for 2025, when they said it is well within reach, I think they are going to reach it quite comfortably. And this is just the start. So yes, from a pricing perspective, of course, it might not be the cheapest name out there, but it's definitely one that is growing much, much faster than probably 90+% of the players in the AI field. Now, of course, it's up to you whether or not you want to be exposed to another name in that AI team, right? We've been talking a lot about that during the live streams. If you want to get exposed to more AI teamed players, then okay, you can open up a lot of positions. But if you think that your portfolio is already fine, you're like, I have Nvidia, I have TSM, I have ASML, I have AMD, etc., I'm fine with my exposure, then of course, there's no need to open up a position in another company. I'm thinking about opening up a position in that company because 1, small market cap, 2, growing extremely quickly, 3, in my opinion, still under the radar, maybe not as under the radar as a couple of months ago, but I still think that a lot of folks on Wall Street and maybe as a whole do not know what Nebius does. 4, optionality. Yes, right now you're investing because of that core business, but if AV Riot becomes huge, that adds a lot to the whole thesis here. The other 2 segments, it's nice to have, not really focus that much on that. Plus, you have to watch the new interview, and I'll probably link it in the pinned comment. You invest in the culture, you invest in management. And I think that the CEO is the guy that will lead this company to, multiples billions of dollars in revenue in the future. At the moment, like I said, we're back to levels not seen since that DeepSeek crash, which actually did go a little bit lower to around $24 or so, but let's be honest, $1 here, a couple of dollars there will not really change that much. And remember, a couple of weeks ago, we were at $50, so yeah, almost a double from here. Am I playing this just for a short-term double? No, I mean, if it doubles in the next 2-3 weeks, then fine. That's easy money, but I still think that this company could be much, much bigger. And with CoreWeave going public or expected to go public, I think it could have a positive effect on a Nebius, seeing how big the disconnect is when we look at valuation. So all in all, that's about it. Quick recap, quick reasoning here why I will be or might be buying this stock pretty soon. What do you think? Are you a buyer, seller? Do you hold it already? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.